Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss the escalating global trade war, denuclearisation of North Korea, populists at the forefront of Italian politics, and the current state of central bank policy ahead of a closely watched US and European inflation stats released this week. But first, I'm going to run down some of the top corporate results to watch for this week. So it's pretty light on Monday. Then we have earnings from Baillie Gifford and French Connection, Fever Tree and RWE on Tuesday. Balfour Beatty, Carillion, Prudential, Adidas and Overstock on Wednesday. Cineworld, Old Mutual, Broadcom and Adobe on Thursday. And then we round off the week with Interserve and JD Wetherspoon. As for economic calendar, there is Chinese foreign direct investment data on Monday, then US CPI on Tuesday, Chinese retail sales, German CPI, Eurozone industrial production, US retail sales, and the Bank of Japan meeting minutes on Wednesday. The SNB rate decision and US trade data on Thursday, and then finally on Friday we have Eurozone CPI and US industrial production. So Jasper, Donald Trump's new tariffs, they've caused a bit of a stir.
Well, they have, Kelly. It was almost a story with different chapters, because there was the initial shock at the announcement of the tariffs on steel and aluminium. Trump then doubled down on it by talking about potential tariffs on European automakers as well. So the markets didn't like that. They got a little bit of respite in the days following, because actually it seemed like maybe it was a negotiating tactic for the other bilateral trade deals that he's trying to work on, so NAFTA and things like that. And then we had Gary Cohn, his economic advisor, leave. And so he was actually one of the more kind of globalist advisors that Trump had. And so now markets are a little bit worried. And overall, I think the way I'd characterize what's the reaction to all this has been is that markets did have their agenda of looking at synchronized global growth backed up by rising corporate earnings. And that was why we shouldn't be too worried about the sell-off that we experienced last, the correction that we had. But now we've got this extra factor which traders aren't really used to dealing with. They're sort of trying to calculate, well, how many different tariffs does it take to undo percentage points of growth? It's a bit, we're turning to sort of trade experts now to try and work out what impact this really has. So net result of just a little extra factor of uncertainty out there.
Yeah. And so big news for the world, I guess. North Korea could denuclearize?
Yeah, well, I mean, so everybody laughed at Trump when he said that he's got a bigger button, a bigger nuclear button, but it seemed, well, I suppose bullies only react to one thing. Whatever's led to this, now North Korea and South Korea are negotiating. Relations have been better since the Winter Olympics, and now the North has said that actually, as long as their regime is sort of protected, they would consider denuclearizing. So from a market's perspective, it's sort of interesting and it sort of isn't, because in 2017, we had this ongoing war of words between Trump and Kim Jong-un, and still markets just really barely reacted. They sort of 0.5% drop and then carry on marching higher. It could have been more of a factor this year because we're now in this higher volatility environment. Well, it looks like we will be, but now it looks like probably if these better relations continue, then North Korea is not going to be one of the causes of high volatility this year.
Okay, right. And so we haven't discussed the Italian election results yet. We may as well discuss that now.
Well, yeah, I mean, naturally we were looking at reactions in the euro, but it was fairly tempered reaction. We actually finished the day higher, I think, on Monday after the result. We had talked about markets underpricing the risk when we did the video a couple of weeks ago, previewing it. And actually the result was more favourable to the populists than most had expected. It was kind of a negative result if you're looking for stability. But actually, there were just other factors at play. All this talk about trade was certainly a factor. So there's a lot of concentration on what's happening with the dollar, and so there's less emphasis on the euro. And obviously we had the ECB meeting the following week as well. So it comes back to interest rates. And then from a stock market perspective, we're just all the other things we're talking about. We're in this kind of choppy range. No one quite knows the direction. And so just the Italian election, that wasn't enough to send markets really rolling over.
Okay. Now we've got US and Europe CPI data that's coming up this week. Based on last week's policy meetings, how are central banks approaching inflation now?
Well, I think the big one was the European Central Bank, and they removed some of the language from their statement, basically inferring that they were willing to up the ante on the stimulus should inflation not turn up. So that's interesting because we've got this inflation data next week for the Eurozone. It actually fell to, I think it was a 12-month low on the previous reading. So actually, inflation is really not trending towards their 2% target at all at the moment. But they've removed the language to suggest that they may react to it. So actually, that by itself makes the inflation a bit less important and sort of suggests that they're on they've set themselves out a path towards tightening policy, almost irrespective of inflation not being close to their target. So that, to me, from a euro perspective, points to more eventual European euro strength. And similar scenario with the yen, they're just a bit further behind the curve, the Bank of Japan.
Okay, thanks Jasper. And thank you all for watching. If you wish to find these videos as they're released, please follow LCG on social media.